I've always looked for silver to confirm gold's move. It always concerns me when we don't see silver and gold not moving daily together, but when you have a very strong gold market, silver isn't participating. That gives me pause. And we're now seeing it.
You're watching Silver News Daily. Subscribe for more.
Imagine this. David Morgan, one of the sharpest minds in precious metals, is forecasting an insane rally for silver that could rewrite the rulebook on what's possible. Silver's current record-breaking climb has already turned heads, but Morgan believes it's only the beginning. What if silver's value soared far beyond today's expectations? Stay with us as we break down his bold prediction and why he thinks we could be witnessing the start of a historic run.
And, how many of us for, decades or more have talked about, deficit spending and problems with fiat money and the trust in government, confidence in the dollar's reserve currency. I mean, all the things that we've discussed on your show and many like these for years. And yet we've really seen the metals, do both well and not so well. I mean, when we started in 2000 at gold at 252, we're over, 10 times that amount right now in fiat terms. But natural, real, true purchasing power, we haven't really gained that much. That's why when people say gold's making new highs, yes, it's nominal. The number 2,700 is a lot larger than 2,000. It was just not that long ago. But in what is it in real purchasing power, it really has not reached the all-time high of 850 back in January of 1980. So that's point one. But let me get more specific on your question. I've said probably as long as almost 2 years ago that I already saw the run to gold beginning. And on many shows like yours, I've explained that central banks or the smart money was moving into gold at a rate that was unprecedented. They were buying gold basically hand over fist, but you weren't hearing much about it in the mainstream financial press. And I gave the analogy of the run to gold. And there's a lot of little sayings that go around the gold market that, a lot of people are familiar with, like there's no fever like gold fever, the gold standard, gold sets the standard, these type of things. And the idea being that at the last resort, the last monetary resort, money is based upon something of substance that can be trusted. And that means that gold is the number one most trusted money that has been voted by humanity over time. Not like we go to the polls, it's just what the marketplace uses the most often. So the breakout as far as psychology has been in gold for some time. And just to further that argument or that idea really is that the run to gold starts as I said, a slow walk, a brisk walk, a light jog, a full jog.
Silver's meteoric rise above $34.00 marks its fifth straight day of gains, fueled by a wave of safe haven investments as geopolitical tensions skyrocket. The Middle East has become a focal point for investors, with recent events pushing silver further into the spotlight. Just days ago, reports surfaced of Israel launching airstrikes on Hezbollah-linked financial institutions in Beirut, igniting fears of broader conflict. And it doesn't stop there. Classified documents leaking Israel's potential military strategies against Iran have only added fuel to the fire. In times of uncertainty like this, assets like silver attract attention as investors seek protection from the volatility that could shake traditional markets. These geopolitical developments aren't isolated. They're reshaping the market landscape, making silver a go-to choice for those bracing for what might lie ahead. And it's not just private investors, but central banks across major economies also stepping into silver. Could this wave of interest mark the beginning of something unprecedented for silver prices? And what does this mean for anyone looking to capitalize on these unpredictable shifts?
Project something real quick on that. We buy gold. This will probably give away and may even upset people, but when you go into one of those we buy gold places with a diamond ring or gold earrings with diamonds in them, and what's these diamonds? They give you zero for the diamond, none, zip. And so people have, and we're all taught how valuable diamonds are and how rare they are and all these things. If you go into We Buy Gold, they will not give you any value for the diamond. Now, there would be some diamonds that do have value. I'm not saying that diamonds are worthless. What I am saying is that as far as those gold buyers are concerned, they are. But someone that has some, very, high grade, large diamond probably is not going to be in the line to, We Buy Gold place. But nonetheless, I think it's important. I didn't know that for a while. When I learned that, I was like, I wasn't appalled. I was like, yeah, okay, I get it. So they're looking for gold. They're buying the gold. They're not going to give you anything for the diamond that may be in that.
While geopolitical tensions have certainly given silver a boost, there's another powerful force at play. Central banks around the world are easing their monetary policies, creating an ideal environment for silver's rally. Just this week, we saw China's central bank slash its loan prime rate, while the European Central Bank and the Bank of Canada are also eyeing significant rate cuts. Even the U.S. Federal Reserve is widely expected to lower rates by the end of this year. Why does this matter? When central banks cut interest rates, it weakens traditional yield-bearing assets, making non-yielding assets like silver increasingly attractive. Lower rates also tend to soften the U.S. dollar, which can further drive silver's demand by making it more affordable for buyers in foreign markets. This monetary shift is already bringing more eyes and more investment towards silver. And with this trend showing no signs of slowing down, we have to ask, how high could silver climb if central banks keep pushing down rates? Are we seeing the beginning of a monumental shift in how silver is valued?
It was announced 1 year later, it was at $50 an ounce. It one day, it was only a 1 day $50 print, but nonetheless, it did trade at that price, which is 8.5 times higher. And that took 1 year. So if you do the math, as I said, it comes out basically 90% of the move, not 10%. It does not guarantee that this market will do that exactly, but it does infer strongly that the last leg up, as I just said, will be the strongest in price appreciation and probably will take the least amount of time. And the reason for that is back to the walk to run analogy. Once you get past that fast jog and you start running, people are, more and more people are gathering in the crowd. The herd mentality takes over. Neighbors are talking about, hey, you know what? I heard that guy on gold. I always thought those guys were crackpots, but you know what? Gold's making $3,500 an ounce. You remember a couple of years ago, it was down to 2,000. It's double, and they get more and more. And a lot of it has to do with the mainstream. When the mainstream starts talking gold, which they are now, not that they ignore it. I mean, it's always on the display at every financial channel. You see the gold and silver price displayed, but you hardly ever hear it talked about. And the more you hear it talked about in the public, the more you can rest assured that they are pushing it too. I remember at the end of the bull market last time when I was still a young man, there were some pretty good sized ads in the Wall Street Journal talking about gold. And they actually had like a new numismatic kind of a club that you could buy in, kind of like the token agreements now, where you could buy shares in a portfolio of rare coins. So you would have 1% of this portfolio. So see stuff like that, it's usually an indicator of a top.
Beyond the impact of monetary policy and global tensions, silver's rally is also driven by something even more foundational: industrial demand. Silver isn't just a precious metal. It's an essential component in some of the world's fastest-growing industries. From the booming electric vehicle market to the expansion of green energy initiatives, silver's unique properties make it irreplaceable. Take solar energy, for example. Silver is a critical element in photovoltaic PV cells, which are the heart of solar panels. With the global push towards renewable energy, the demand for solar technology, and by extension, silver, is expected to soar. And it's not just the solar industry. Electric vehicles, which require significant amounts of silver for their electronics and batteries, are projected to expand rapidly as governments incentivize eco-friendly transportation. So, as silver's role in these green technologies continues to grow, it's fueling a long-term demand that could sustain and possibly amplify its current rally. Are we witnessing a transformation where silver's value as an industrial metal could push it beyond its historical role as merely a safe haven asset.
And we're now seeing it take place. So there's very little upside resistance beyond 33. As many people have stated, it's a fact. And, we're going to get to 50 this year. I highly doubt it. Will we see 40 this year? I don't know. What I do know, I started trading futures and got so much into the hard money, sound money camp and been there my whole life, basically, my whole adult life. One of my first brokers said, nothing moves like silver and soybeans. Not that you need that comment, but the idea being that they can move very rapidly. And this is true. And so it can just, as I said and coined the adage many years ago on Financial Sense News Hour, silver will scare you out or wear you. And scare you out is like you're in a leverage position and you're long and if you're long and it goes short or drops rapidly, it'll scare the heck out of you. And if you're on the other side, it does the opposite, it'll scare you. And then it could just do nothing for a very long time or slowly grind down like we've seen so many times. So people just get fed up, I'm doing this. And that has to do with kind of an investment attitude and buying too much, buying the wrong kind or buying the wrong time, or not taking a long-term view or really understanding what these markets are about. So I answered probably a bit long-winded, but we are in a new era. We are in what I consider the third and final leg up in the precious metals. This is the leg that lasts. Actually, the duration is not that long usually, but the price appreciation is phenomenal. And this is where you get that adage that, actually Jeff Christian mentioned it to me many, many years ago, 90% of the move comes in the last 10% of the time. And of course, I actually did the math on that. And it was about 87.5% of the move came in the last 7.5% of the time in 1980. From 1965, when silver was demonetized in the U.S. at $1.29 an ounce, it took till January of 1979 to reach $6 an ounce, and $6.
As silver demand surges, there's an emerging problem that could supercharge its price even further, a major supply deficit. According to recent projections, the silver market is on track for one of the largest supply shortfalls in over 2 decades, with a deficit estimated at over 215 million ounces this year alone. This supply gap is no small matter, especially as industrial demand climbs to record levels. The supply deficit is being driven by a few key factors. For one, silver production hasn't been able to keep up with rising demand, particularly as more of it is absorbed by high-tech industries. And recycling, which typically helps bridge this gap, is also declining as silverware and photographic wastes hit multi-year lows. With the silver supply stretched thin and demand showing no signs of slowing, we're looking at a perfect storm for upward price pressure. Could this imbalance push silver to new highs as investors and industries alike compete for limited resources? Or are we still underestimating how tight this supply squeeze could become?
A fast jog into a slow run, fast run, and then an all-out sprint. And that's an analogy for at the end, people that believe that perhaps the dollar is going to fail or is failing, or maybe that it won't fail entirely, but they know or believe that the dollar's purchasing power is going to be worth so much less in 3 to 6 months that they're smarter buying anything of substance than holding the dollar in a bank account. And that's the all-out sprint. We're not there yet. We may not get there. I believe that we will. So now we have to look at silver. And silver really is the money of the people and has been for eons. But I'd say in the last 10 years, maybe even 20, silver has been put off as an industrial metal only pretty much. I mean, you hear a lot of young guys and, gals say, silver isn't money and blah, 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 blah. And in a way, the argument's really not that tough. Legally, silver is money. It's a legal fact. I mean, I could prove it in court of law, and I don't want to take the time, but I could take 4 1964 quarters, walk into a store, and what do you get for $1 these days? Half a pack of gum or something, some penny candy for $1, and they would have to accept it. In fact, most people probably wouldn't even notice they were silver quarters. They might notice they were old, stick them in the cash register. But economically, it's not. because why would I spend something that's, worth 250, 10 times the face value, so that dollar is worth 10 or whatever, or more than that, maybe 20. I'm not doing it in my head today, but significantly higher, by many multiples, for something that costs, a dollar. Why would I spend something of fiat value that was, say, several times as great? So economically, it's really not. Coming back on point, I always look for silver to confirm gold's move. It always concerns me when we don't see silver and gold not moving daily together, but when you have a very strong gold market and silver isn't participating, that gives me pause.
One of the most intriguing indicators pointing to silver's potential for explosive gains is the gold to silver ratio. Historically, this ratio has often acted as a signal for significant movements in silver prices. Right now, the ratio suggests that silver is undervalued, massively so, especially compared to the steady, robust performance we've been seeing from gold. This discrepancy has caught the attention of many analysts, who are now watching for a catch-up effect where silver could surge to close the gap between its value and that of gold. Let's break down what this ratio means and why it matters. The gold to silver ratio reflects how many ounces of silver it takes to equal 1 ounce of gold. Over time, this ratio fluctuates, but historically, it's averaged around 60 to 70 ounces of silver per ounce of gold. Right now, however, the ratio is at the high end of that range, signaling that silver is significantly undervalued. In past cycles, whenever this ratio has remained elevated, it has eventually corrected, often dramatically, with silver prices skyrocketing as they catch up to gold's gains. This isn't just a theoretical possibility. It's a pattern we've seen repeatedly. For example, back in 2011, silver was trading around $30 an ounce when it suddenly surged to nearly $50 within months, largely due to the gold to silver ratio correcting itself. Investors piled in, realizing that silver's low price compared to gold presented a unique buying opportunity. Today, some believe we could be approaching another such moment where the ratio corrects, sending silver on a potentially steep upward trajectory. But what's driving this potential correction now? For one, gold has been rallying, with increasing demand from central banks and investors who see it as a hedge against economic and geopolitical uncertainty. As gold continues to climb, silver historically follows suit, often in a rapid and intense manner. This relationship between the two metals suggests that silver might be poised for a similar ascent, especially as market conditions favor precious metals as safe havens. And unlike gold, silver's industrial applications add another layer of demand, potentially accelerating any catch-up rally even further. The gold to silver ratio's movement hints at something big. Analysts are speculating that if silver does catch up, it could propel the metal to heights not seen in over a decade. Some even believe this could be the start of a new bull market for silver, with prices far exceeding what we've seen so far in 2024. And if history is any guide, those who recognize this potential early could stand to benefit significantly. So are we on the verge of seeing the gold to silver ratio drive an explosive rally in silver? Could this undervaluation set the stage for one of the most significant price corrections in silver's recent history? And if so, what does this mean for those looking to capitalize on silver's unique position in the market today?
Investing. And that's on the web. You can type in David Morgan, 10 Rules of Silver Investing. It applies to gold as well. And those 10 rules will keep you out of trouble. And, I won't go through every one of them, but, it talks about starting small. In other words, don't jump in all at once. It talks about dollar cost averaging. It talks about buying the right amount. Okay. And it was try to be pithy, like cough medicine, too much is too much, right? You need the right amount to get over your cold. So you need the right amount of precious metals to balance out and have a happy life. To me, and I don't like calling it insurance, but you can call it that. I really don't care too much about what you name it. But the idea is to have balance in your life. Like if you overeat, you're going to get fat. You undereat, you're going to be malnourished. Where's that happy point? And that's the same thing with precious metals investment. I am certainly overweighted in the metals, as most people that follow my work are. But that's a choice, and I'm not going to tell someone they can't, make their own free will and make a choice on, what kind of, portfolio makeup they want. But nonetheless, if the cat was out of the bag, as I think it was Henry Ford that said, people understood how the banking system worked, there'd be a revolution by tomorrow morning. And that comes right back to the sound money precept that we really need to have sound money. One last comment. I'm reading Good as Gold by Judy Shelton. Very interesting read. I haven't finished it yet, but it's just fascinating. All this stuff we talk about all the time, but here's a PhD in academic that was nominated by Trump to be on the Federal Reserve Board, talking about sound money and what the importance it is for everybody. And I think the one point she continues to make early in the book is that it's a level playing field for everyone. It doesn't favor a certain economic class over another.
David Morgan has long championed silver as the money of the people, a precious metal that, unlike gold, has a deep-rooted history as a widely trusted and accessible form of currency. For centuries, silver played an essential role in economies around the world. Today, even though it's more commonly known as an industrial metal, Morgan argues that silver's true potential as a store of value and a hedge against economic uncertainty remains largely untapped. Morgan's view is that silver's recent rally could be the beginning of a much larger movement, and he likens this shift to the early stages of a marathon gaining speed. At first, people may walk or jog, testing the waters, but once momentum builds, it can quickly turn into a sprint. According to Morgan, we're seeing that transition now. Just as central banks are loading up on gold, individual investors are starting to take a serious look at silver, realizing its affordability and accessibility make it an appealing safe haven. This momentum shift is also evident in growing conversations about silver in financial circles. Once dismissed as just another industrial metal, silver is gaining recognition as a reliable asset that can withstand economic upheaval. With rising concerns over inflation, currency instability, and market volatility, more investors are turning to silver as a secure store of value. And for Morgan, this means silver isn't just poised to mirror gold's gains. It could very well surpass them in the short term, especially as larger segments of the market wake up to silver's overlooked potential. So is silver finally ready to reclaim its role as a go-to store of wealth? Could this rally be a sign of an impending wave of interest that might drive prices higher than even gold? As Morgan suggests, will silver's inherent value as the people's money prove to be its strongest asset in an era of growing economic uncertainty?
Must own gold in your portfolio if you want maximum performance. And everybody wants maximum performance. And not only do you want maximum performance, you want maximum performance with the least amount of risk. Ibbotson and Associates did a study that was funded by BMG Group, my dear friend Nick Beresheff, who's no longer with us, and the number's 15%. Jeff Christian of CPM Group did it from 1968 on, and the number was 25%. And people like me recommend about 10%. And that goes back to what I said earlier about, people buy too much, buy the wrong kind, or jump in all at once or whatever. But really, it's been proven time and time again that factually, objectively, without any emotion, that precious metals are required. And this is what's sad about the financial planning industry, because they never are taught this. And there could be a day when some of their clients lose a great deal of money in the stock market, and they listen to a show like yours and say, my goodness, if I would have had 25% in gold, I'd be in the positive right now, even though the stock market took a massive decline. Or, the bond portfolio got wrecked because of interest rate fluctuations. But if I had gold in my portfolio, I'd be even, right? Or whatever. And this saddens me that, that level of, money management or whatever you want to call wealth managers, all these terms that they use are basically stockbrokers in most cases. So I'm not against stockbrokers, but the point being is that they are undereducated as far as money, what it is, how it works, and what happens to it when you make too much of it. There's a lot of everything. It usually has low value. There's a lot of, yellow dresses at the women's dress shop, no one's buying them. They're going to discount them and they're going to put them on sale and try to move the product because there's so many of them. It's the same in, economics. So I think I answered. The last one I want to say is I wrote a 10-pointed one-pager called 10 Rules of Silver Investment.
Now, with all the factors we've explored, we come to the ultimate question. Can silver truly reach unprecedented highs? David Morgan believes it's not only possible, but also likely, given the perfect storm of elements driving its rally. Between soaring demand from green industries, the undeniable supply deficit, monetary easing from central banks, and the rising geopolitical tensions pushing investors towards safe haven assets, silver is positioned at a unique point in its history. Morgan's argument hinges on the idea that silver, though still far from its all-time high, is ready to catch up, and then some. He points to the gold-to-silver ratio as a key indicator, suggesting that silver's undervaluation is simply unsustainable. If this ratio corrects, as history suggests it could, silver prices might skyrocket, potentially bringing us close to a long-awaited breakout point. And with industrial and investment demand continuing to rise, the stage is set for silver to test or even exceed its historical highs. Imagine a scenario where silver reaches $1.50, or perhaps even climbs toward the ambitious $100 mark. In an era marked by economic uncertainty, Morgan argues that silver could offer a hedge that's both accessible and resilient, allowing everyday investors to preserve their wealth. For those considering a move into precious metals, the window of opportunity may be closing fast. As always, remember that this information is for educational purposes and not financial advice. However, with silver positioned for what could be a historic rally, the time to watch and possibly act is now. And if you're as intrigued by silver's potential as we are, don't forget to subscribe and stay tuned for more insights that could shape the future of your investments.
Things come to mind. One, before I start, is the gold price in paper terms that we talked about. When I got involved on the internet in 1998, and about 2000, I wrote an article called "Engineering the Price of Gold." Everyone wants to know what's the paper price of gold. And in theory, it's very simple. You just take for the U.S. what the purported amount of gold is and the amount of M0 base money dollars out there, and it's how many dollars versus how many ounces. It's a division problem. It came out 2,500 the ounce. And now, 25 years later, Jim Rickards just did the same, arithmetic. It's a division problem. Then it came out 27,000 the ounce. So believe it or not, and this is the hardest concept, and I want this to get out first before I'm going to answer your question fully, is believe it or not, in terms of paper versus metal, you are actually buying gold today in today's value of $1, very similar to what you were buying in the year 2000, because the money supply has gone up that tenfold in those 25 years. And so to tell someone, well, David bought his gold at, 300 and, now it's almost 10 times as much. Wow, he's made a killing. Actually, I've preserved my purchasing power and I have not made a killing. But that's an extremely hard concept. But to get the one, and I've had I'll call it an argument. I've had discussions, heated ones at times, with certified financial planners. I did work for one early on in my finance career, but the best studies in the world will show you on portfolio analysis that you must, and the word